afternoon. Thank you for joining us for How to Command Premium Pricing by Leading with Advisory. I'm Gary Dehart, the publisher of Insightful Accountant and the host of today's webinar. Our speaker is Shannon Vincent. He is the CEO and co-founder of Renew Group. Shannon has consulted with firms ranging from sole practitioners to the top 100 since 2001, helping them create sustainable and profitable businesses. As I said, he's co-founder and CEO of Renew Group, which is an ROI-based methodology that transforms small to mid-size accounting firms into highly profitable firms by leading with advisory, commanding premium pricing, and working with the right clients. Renew's numbers-based starting point and recurring accountability yields a firm with less tax season, more profits, and better clients. That sounds like a winning combination to me. So we do have a few housekeeping items. This session is eligible for CPE. In order to obtain that CPE, you must be here for 50 minutes, 50 minutes. You must answer 3 out of the 4 poll questions, just like on anything else that's CPE. If you meet that minimum criteria, you will receive an email within 24 hours with the link to a survey about this session, and then complete that survey and your certificate will follow. If you have any questions, we ask you just to put them into the questions panel. Shannon can either address them as we go on or towards the end. I think probably most likely towards the end. And a link to the recording will be sent to you along with a link to the presentation within 24 hours of this event. Once I go off camera, I will also put those 2 things in the chat in the chat. That is it for housekeeping. So Shannon, it is all yours. We certainly welcome you to today's event and thanks for sharing your knowledge with us.
That's awesome. Thank you, Gary, and welcome everyone. Happy to be here. Shannon Vincent calling in from the San Francisco Bay Area, and we're going to focus on how to command premium pricing by leading with advisory, and we'll jump into that, of course. Again, my name is Shannon. I'm from Renew Group. I am a CPA by trade. My partner, Colin Dunn, is a chartered accountant from the UK, working globally in the accounting profession. We have 50 years together combined. Goal is less tax season, more profits, better client, and leading with advisory. So we'll jump into all that. We'll be together 55 minutes. Again, really want you to answer those poll questions so we can shape the webinar as we go through it, and I can talk to things a little bit more specifically. So we'll dig into those. Also feel free to post any questions in the chat panel. And yeah, just happy to be here. Happy August. And let's go ahead and dig in. And I thought what we could start with is just, you know, a little bit about you. And just, you don't have to complete this in the chat panel, although you certainly could, is, you know, do you secretly know or think that your firm's expertise is worth more than what you are charging, but you're afraid of raising prices? So you're afraid either you think clients will leave or you won't get a prospect. So that's just something to sort of note as we think about that. And then also, is there more talk than action when it comes to business development and advisory in your firm? Obviously, advisory is a big discussion point in our industry, specifically as we go into an economic downturn or are in one. So we need to be thinking, hey, if this sounds like me, what are the actions we need to be taking? And from our perspective, what we want to be doing is focusing and discovering the 5 elements. So that's what I'm going to focus on today, are these 5 shifts. Just a couple housekeeping items. One of the things that we do is, again, being accountants, is we focus on the numbers. So I'll talk about that today, give you some to-dos there. And then, again, just focusing on the right clients, and then making it so your best clients aren't paying for you to serve those squeaky wheels, how to lead with advisory, and then how to build a firm based on more target clients so you can create more value for the right clients. And you'll hear us talk a little bit more about that. What I want to do now is talk a little bit, again, just framing up the webinar for you, is thinking about, well, where are we in the phase of the life cycle of our firm business? And I'll go through this quickly from left to right, but essentially when you start your firm, you know, we call this your infancy stage or hanging your shingle, is you have a tendency, hey, listen, you're in survival mode. You're going to be all things to all people. probably have one or two larger clients. You've taken on some 1040s. Things get good. You do good work. And then your next issue is you start getting busy. You're getting some referrals. Maybe you're getting leverage in technology or people or pricing, and you have a good service business. And some of our firm friends say we're in the point there of that phase where we're playing whack-a-mole, right? You come into the office and you're just sort of dealing with some fires, whether those are internal or external. And then what happens is capacity becomes an issue. So we start thinking about, well, how do we create capacity? I'm feeling overwhelmed as a firm owner / partner. And the mindset shift that we'll talk about there is making the firm the number one client. And it sounds a bit paradoxical. However, the point is, if you make the firm the number one client, you will create the right value for the right clients in your firm. And so what happens is firms reach this point of overwhelm and they say, hey, we need to focus on a true business model. And so what happens in that as your firm matures is you have multiple models under one roof, and this may resonate with you. And we see where firms are still doing a bunch of 1040s, but they're also doing accounting and advisory work. So some of the symptoms of that are, hey, we serve our ongoing monthly clients, quarterly clients really well. Then we get to tax season, we put our heads down, and from February 1 to April 15th, we're focused on 1040s. And then the end of tax season becomes a little bit anticlimactic because then we're like, oh gosh, we need to go back and then focus on those business clients that we quote unquote ignored. So the challenge with having multiple business models is it feels like tax season all year round, because then you run into 9 and 10, 15, and then you're into planning season. So you've got sort of a lumpy model. And so what we see there is firms say, hey, we're making some money, but we know there's got to be a better way. And so the mindset shift there is one of unconditional abundance, meaning, hey, if we have capacity, we know we can bring in the right types of clients, but we're so busy just making it all work. We're not doing enough business development. We're not leading with advisory, and then playing to win as opposed to playing to not lose. So often as accountants, we come from a place of scarcity, playing to not lose. We're revenue focused, not profit focused. So there's finally a mindset shift there, which is we can have a firm that's focused, intentional. We lead with advisory that's based on largely target clients. And we call this the succession phase. And the succession phase doesn't necessarily mean that you want to sell your firm, but it's a firm you want and or the folks that work for you do, or you could transition it at some place. So that's the ultimate goal. I want you to think about that framework and think about where you sit in your life cycle of your firm. So with that, let's go ahead and go to polling question number 1. We have 4 polling questions again for CPE. I think you have to answer 3 of them. So Gary, if you wouldn't mind publishing that, that would be awesome. And let's see how everyone on the call is feeling. And the question is, do you feel overworked and that it's difficult to get caught up and that you're often in, I just need to get through this mode? And you can see yes, no, and often enough. So I'll give you a moment there to answer that. All right.
All right, I'm gonna go ahead and close that out and I'll share the results here.
All right, so 44% are in that mode of just getting through it. That's an astounding yes, often enough, 33%, and then no, 20%. So we'll call it the Pareto principle. 80-20 are saying yes. So thank you for that. Appreciate that. So let's talk about how we can work with that. I think one of the things to consider as we go through the shifts, again, there are going to be 5 shifts today, is we encourage you to not cherry pick. Again, Colin and I have 50 plus years of working with firms, transforming them, making their firms more profitable, working with the right types of clients. So each of these shifts are critically important to think about and work on. So Number one is making the firm the number one client. And each shift we're going to go through as a case study. And so this is Jen. Jen runs a CPA firm in Texas. When we met her, she was revenue focused, overworked, overrun, and lacked a target client definition. So as you would expect, as many of you have that overwhelm and just getting through it, she had too much email, chasing missing information, calls, hours, and then obviously doing tax appointments and meetings. Jen has a big family. She's got, a few daughters. She missed her family during those busy times. And she's also an iron person. She's a triathlete. So she wasn't being able to train as much as she wanted. So for her, it was about, hey, I need a better life and more profitable. And when we met with her initially, she had an average client revenue of $1,000. So we encourage you, again, being numbers folks, to think about, well, what is our average client revenue, which is simply just the number of clients you have divided into the revenue, and think, well, what is our average revenue? So what was Jennifer's mindset? Again, because we want to be in this making the firm the number one client. She said, if you take care of the client, the profits will take care of themselves. Not true. When I started off in public accounting, that's certainly, clients number one. It's not that your clients are bad people. It's just they expect you to know your business model, how to allocate time, capital, and human capital. And so what we need to do is say, we're going to make the firm the number one client. Jennifer's mindset was, we're going to be all things to all people. We're going to be revenue focused. We're going to take on 1040s. We don't necessarily have a minimum or target client. Service provider mindset. And she had purchased her practice and had some debt service and cash flow concerns. And she reached a point where she'd had enough. She'd had too many hours, not enough profits, those cash flow concerns. Her service suffered, particularly for those better clients, due to client volume, because unfortunately, as you know, the squeaky wheels get the grease. So actually, sadly, in our profession, your better clients pay for those squeaky wheels, and she didn't have enough capacity. So her defining moment was emotion equals action. So we all know this. We can't analyze ourselves into change. Change comes from being emotionally fed up or excited, and then you justify the decision, even as accountants, even as analytical folks. So we have to say emotion equals action. The first thing Jen did was she learned how to say no. So a great productivity hack is our play on words, which is the joining of no and momentum and calling it momentum. So we just need to say no more often and develop that no muscle. So the more you say no to things, meaning dictating the terms of client relationships, taking on the right clients, the more value you will create and the more profitable you will be. So Jennifer's process was, made a decision to transform the firm. We performed a Pareto analysis for her. I'll talk about that here today. She repackaged her offering. Scope creep, as you all know, is a big issue, something we have to deal with. She increased prices. She made the intangible tangible. We don't always do a good job of selling our services and what we do for clients, because we didn't become accountants because we want to be salespeople, but we do need to make those things that we're doing tangible. And then ultimately, she took a number of 1040s and she packaged them and let them go. So some firms sell them. Actually, I was working with a firm yesterday, again in Texas, different firm, that's packaging up 1040s and selling them. You can also upgrade them, or you can just move them on to another referral source. Jen defined target client and took action. So ultimately, this making the firm the number one client is putting on your own oxygen mask first. If you've traveled on an airplane at any point in your life, as you know, what the flight attendants do in the safety demonstration is they say, make sure you put on your own oxygen mask first before you try to save your client or your family or friends. The reason for that is if there's no you can't save them. So we got to make sure we put on our own oxygen mask first. So this shift insists that you say no to clients just for the revenue. So don't just take on clients for revenue. You must design your firm so you can create the most value for the right stakeholders, you, team, clients, and community. And sometimes this is hard for firms to get their head around, but it's super important. And you can see what ultimately ends up happening. And the other consideration here is when you say no to something, you're saying no just to that one option, right? So if I get invited to a meeting that I know is going to be a waste of time, or maybe something personal that I don't want to go to, you're saying no to just that option. However, when you say yes to something, you're saying no to every other option. So one of the things that we need to work on is thinking about A, opportunity costs, B, unintended consequences. No is a decision and yes is a responsibility. And you can see where this landed Jen, and she's still working on it. We call it pricing and pruning, but Jen's average client is now over $3,200. Target client is a client who needs year-round services in the 8 to 12K range. So we're always encouraging you to look and serve bigger clients in a more effective, intimate way. Her profit has doubled. She's having a lot more fun. And she says no more than she ever said yes now. So again, getting that momentum. So that's the first shift, making the firm the number one client. So let's talk about shift number 2, which is commanding premium pricings. And to do that, we'll talk about Seth down in Arizona. Seth runs a CPA firm in Phoenix. He bought the firm from his father, who had a volume tax intensive firm, old school, if you will. The firm was profitable, but they earned every single penny. And I'm not saying you shouldn't earn every single penny, but they were literally spending all tax season in tax appointments, doing returns in front of clients. So tons and tons of work. And when we started working with Seth, he had 1,600 clients. This is a sole practitioner, single partner firm. Yeah, he had a team, but that is just a bucket load of clients. And we're looking at a far lower number of clients per partner. So we can talk about that. So what was Seth's model? Let's talk, and again, want you to be thinking about your own firm, maybe making some notes. They had in his stated rate of $250 an hour. And we find that stated billable rates, which we don't, advocate, most partners are making about $100 an hour when you really think about it. So if you're making $250,000 a year as an example, and you're working 2,500 hours, you're making $100 an hour. So we don't love that. His words were fixed price. We like to do advanced pricing or upfront price. He was doing a ton of free work. One of the things we want you to do in your engagement letters is state what they don't include. So I think we're pretty good in our profession at stating what our engagements do include, but we want to state what they don't include. We want to get paid for value, not being pricing apologists, manage that scope. Again, what we do is we often get too busy and we just get the work done, so we don't write it up or have that change order. Seth's words were proactive advisory, but he was involved in reactive compliance. His words were, I want to focus on the right clients, but he was stuck with the squeaky wheels. And then his words were, I have a team, but the reality was, and Seth jokes around, I basically wore a Velcro jacket to the office and everything got stuck to me. So he thought, hey, if I can do a return in front of the client and make a few $100, life was good. But he was doing tons of free work outside of tax season, questions, phone calls, IRS notices, similar to Jen, revenue focused, had that Velcro jacket on, and he was actually working for less than $100 an hour. So his defining moment, again, emotion equals action, is after one tax season, his entire team came in and said, we're quitting if things don't change. So I actually met him at a conference after that, and he said, my team is done. I need to make a change. So what was his process is he made a decision to transform the firm. He started focusing on leverage. So where do we get leverage in our business? One of 3 places. We either get it in pricing, technology, or people, or a combination of those 3. He increased his prices, so he did a deep dive into the numbers. He made tax appointments, meetings, when we never want you to sell meetings, a buy up. He removed himself from the workflow process, and he defined target client and took action. So here's some key things on commanding premium pricing before we go to polling question number 2. You are not selling your time. Time cannot capture the years of experience, risk, and commitment you have to your clients. You are not selling your knowledge. You are selling the value and the outcomes of the results that you deliver, and that's what people want. So never sell inputs, always sell outcomes. And remember, a service in demand is always worth more than a service delivered. So put another way, you're always willing to pay more for lunch before you've had it than after. And so we need to do the same. Ultimately, pricing and profitability are not determined by your effort, hours, or your competitors. So we want you, and we'll talk about it, is you need to differentiate your firm, because what you don't want to be doing is having an apples to oranges comparison and then your prospects or your clients complaining about your prices when you're much different. So we need to be thinking about, how are we differentiating your firm? So this is interesting. Seth's just an amazing story. So this is an email we received from him recently. And just a quick note on this, a lot of firms, when they take on a client, particularly on the accounting advisory side, is their first job is to say, hey, we need to go back and clean up a few months worth of QuickBooks or the Works or Xero, whatever it may be. They do that for free. And so one of the things we really encourage you to do is to phase into your pricing. And so rather than price the job on the front end, what we want you to do is say, hey, we're going to do a phase one. It's going to clean up 3 months. These are the outcomes of that phase one. Is we'll clean them up. We'll get a better handle of what's going on. We'll assess your internal controls. Maybe we'll assess your bookkeeper, your processes, and then we'll price the ongoing work, right? So that's key. So that's one way to increase profitability right off the bat. So Seth's email said another client converted to monthly all-inclusive. That's his advisory, accounting, and tax package. And he charged $77.50 for cleanup and $18.50 monthly. And just a few years ago, he would have charged $800 and $900. So then he's gone from 1,600 relationships to 425, right? Think about your email, think about your life, think about unintended consequences. Revenue's up over 50%. And he said, I set boundaries. If a prospect doesn't pass the gut check and isn't willing to pay premium prices, we pass. And then he goes to talk about how, again, our focus is fewer clients, higher value. And he talks about having more freedom and sanity. Thank you. So with that, let's go ahead and go to polling question number 2, please. Do you secretly know your expertise is worth more than what you're charging, but you're afraid of raising prices? So one way to think about it is to think about that average hourly charge rate in your firm. If you're not completing timesheets, that's okay. You can always estimate it, but average hourly charge rate would essentially be net revenue divided by billable hours. If you don't have billable hours, you could estimate them, and that would give you a good feel for your pricing. And we'd like to see, in that $250 an hour range. All right, so thank you, Gary. Publish that. So, wow, here we go again. The 80-20 rule. So 80% are saying effectively, good question, or yeah, absolutely, we need to be commanding premium pricing, and 20% of you are commanding premium pricing consistently. So again, shift number 1 is making the firm the number 1 client. If you're struggling with that, I have a simple exercise for you. And that simple exercise is talk to your spouse, partner, team, and say, what are the 3 things that we're doing to make the firm the number 1 client? What are the 3 things that we're doing that don't make the firm the number 1 client? That's a great exercise to do around the lunchroom, over a cup of coffee with your team. So let's go ahead and go into leading with advisory. And again, if you want to post questions in the chat panel, we can cover them either during or throughout the presentation here. So first of all, there's a ton of talk about advisory, but I don't think there are a ton or a clear definition in our industry. So our definition is having or consisting and the power to make recommendations, but to not take action. So I think that's key. Advisory is to not take action. And I think in our profession, we get too hung up on wanting to deliver reports or meetings. And the key of advisory, frankly, is just moving the needle, right? Understanding what your client's objectives are and moving the needle. Clearly, part of that's having cleaned up and timely financials, but then taking that information and providing recommendations to your clients. And I think that mindset shift can help a lot of firms. So with that, before we dig into how we do this, we're going to pop another question at you here, polling question number 3. And do you feel like you have more opportunity to provide better service and advice to your target clients, but the squeaky wheels get the grease? And the 3 responses, we try to have fun with the responses. 1 is, shh, don't tell my target clients. Yes, it's hard to create capacity and have the know-how, or no, we are serving all of our clients extremely well. So let's see how we fare here, and then we'll go into another case study. All right, slightly different responses here for polling question number 3. 86% said yes, it's hard to create capacity and have the know-how. Appreciate you being candid, and of course, all these answers are confidential. I'm transparent about those. And then no, we are serving 14%. No, we are serving our target clients extremely well. Good stuff. All right, so let's go ahead and go into case study number 3. So Perry runs an accounting firm in California. One quick note on that, about 20% of our clients in California, because sometimes people say, well, hey, is this a California thing? We work with firms across the US, from New York to Tennessee to Missouri, you name it, rural, suburban, all different shapes and sizes. Perry happens to be in Northern California. He came to us when his firm had revenue of $816,000 from 508 client groups. So you can do the math there on the average client size, working super hard. Perry felt stuck and the firm was completely reliant on his efforts. Tax season was miserable with too many hours and lots of tax appointments, and he lacked capacity for business development and advisory and that know-how that y'all were talking about. So at its core, what Perry wanted to do and what he provided and wanted were some differences. You guys have a copy of these slides. So again, you can work through these with your team. You can schedule some time with us. I'll talk about that at the end. But what he provided was tax compliance. What his clients needed and wanted was goal achievement and growth. He provided accounting. What they wanted was peace of mind and trust. He provided a test, but what the clients really wanted was confidence to move forward. Did some tax speak. They want business language. Lots of accountants. Perry was providing CYA advice, cover your apples advice rather than opinions, and then reactive service rather than proactive trusted advisor. And so, folks, just one thing on this, and appreciate you bearing with me, is on these need wants. These are the outcomes that you should be putting in your engagement letters and using in your sales process. So please don't tell someone, oh, we're going to do your tax compliance. You could say, yeah, you're going to do their tax returns, but make sure you're adding will help you achieve your goals. Or if they're talking about accounting, say, yeah, we're going to do your monthly accounting. And the outcome of that is going to be peace of mind and trust and confidence to move your business forward. So critical thing to include in your process so you can differentiate your first firm and command that premium pricing. So 86% of you said you were struggling to find the capacity. So let's go ahead and talk about that. One of the things that we do is we have a methodology called Pareto for Profit. Certainly, some of you could do this on your own. We're also happy to work with you. And essentially what we do is we say, what are the price ranges? This is a smaller firm. I have a larger firm on the next slide, and say, here are the revenue bands. Here are the quantity of clients, and this is the revenue total, average price for the band, cumulative number of clients, and cumulative revenue. And so what we try to do is say, and the Pareto principle is just essentially, well, inputs don't equal outputs. We find that 20% of clients create 80% of profits. And all the studies that we do an annual benchmarking study, it's actually 30% of clients create 70% of profits. And so we find in this red section on the bottom, which is what we call the insanity zone, is creates a ton of activity, but not a lot of revenue. And you can see this, right? I mean, you can see right here in the insanity zone, 24% of revenue is represented by 71% of clients. Let me say that again. 24% of revenue, 71% of clients. That is dramatic. So if we can upgrade those clients to the next zone, so that's the red zone is what we call the insanity zone. That's below break even. One of the things we ask you to do is you can do a quick straight line break even, and you can basically say total costs in your firm before labor divided by the number of clients. So that's going to be a straight line. This is what it costs to have a client before you put any labor into it. That's essentially your break-even cost. Then what we move up to is your green zone. We call this your scalable or leverage zone, which is these are the clients that don't create a bunch of friction for you. You typically are getting good leverage, meaning that price, tech, or people. And this is really where your target client definition comes in. So we want to say, how do we get more of these in this middle green zone? And then the yellow zone is what we call the fragility zone. And I talked about a lot of firms when they first get into this business, they get seduced by revenue. So we have clients that have a lot of revenue. Our firm, we end up becoming a service provider because we want to take care of them. We want to make sure that we don't lose that revenue. But what we find often in our analyses with firms is those in that fragility zone, we call it fragile, right? Because they're fragile clients. If we lose them because maybe one team member is spending a lot of time on them, we'd be worried about revenue, all those sorts of things, is they're actually the least profitable. So this is what we do is Pareto for profit. And then I want to show you just a larger firm here to give a feel for it. This is a $1.1 million firm. You can see 15% of revenue is 58% of clients. So what our goal for you is to have less than 5% in that insanity zone, less than 5% in that fragility zone. Let's get stuck in the leverage and scalable zone and get focused on creating value for the right clients. And of course, you can change the revenue bands and to suit your size of firm as well as we can do that. So this is a great exercise just to be thinking about, okay, we do all this activity all year round. How does it shake out for us and look differently? The other thing I would encourage you to think about is F clients, which of course are friends and family. And what we find in all the work that we do is most firms think that they have about, half a dozen, less than 10 F clients. The reality, it's somewhere between 25 and 50. So our encouragement there is to just really have you essentially say, hey, we're only going to do 6 or have a hard number. And those others, you either, charge retail or move them on. And again, not always easy to do, but something we encourage you to do. So where is Perry now? So Perry's revenue has increased by 91%. He absolutely ripped the Band-Aid off. He operated without a minimum price. He raised it to $750. So he really ripped the Band-Aid off there, frankly. Bold move. His client groups, again, over 500 are now at 157. Profits double. His revenue per client is up by 411%. His target client selection criteria continues to rise. Again, I want you to think differently about minimum prices versus target client. Perry actually, when he went through this, he attracted a partner to his firm, which he couldn't do before. So again, if he got into that succession stage, he attracted a great partner. And his role has changed a lot. He's now 100% focused on target clients and leading with advisory, doing business development. Put another way, his own sanity and happiness has gotten much better. Please note, this stuff takes time. Everything that I'm telling you to do, you have to make your own. So it's not like if you've had your firm for decades, you're going to fix it in one season. It definitely takes a couple seasons. With that said, we find that most firms have a lot of low-hanging fruit, and we can make positive change pretty quickly. So let's talk about, again, that sea of sameness and talking about who we're really competing against. So most firms are reactive. I just want to talk about what I think you need to move towards as you think about your own firm. Proactive and forward thinking, pricing up front and value-based, talking about those outcomes. I gave you those examples in SETH'S model. Select number of target clients where you have more frequency of contact, not having transactional relationships, using their plain language, right? We're big fans of trying to think about, hey, here are some key performance indicators. Let's use business language with them, leading with consultation advice. And rather than being all things to all people, just focusing on momentum, making it a little bit harder to work with your firm. So what is leading with advisory? You talked about wanting some specifics there on know-how. And this is just an example of what a quarter would look like. In this case, it's the first quarter. Is service would be advisory and consultation. So we could have year-round proactive tax, accounting, and business advice. On tax strategy, we could do quarterly check-ins and have a strategy discussion in that first quarter, focusing on the prior year return, missed opportunities that we can do this year, tax planning, obviously tax quarterly estimates, tax planning check-ins, and estimated tax payment schedule. Again, we don't want you to sell meetings. We find our firms are doing little videos or written recommendations, making themselves available because time does not scale. You can only do so many meetings. You need to think about how you're getting leverage there. On the tax and accounting side, again, what are those KPIs that you could be focused on, focusing on prior year financials and trends, representation resolution, and then of course, tax compliance at the end, because we all know this as accountants. If you start doing the tax return, if you start working on tax planning when you're doing the return, it's too late. So this is how you can lead with advisory. And again, this is how Perry defines it. The proactive nature of this engagement is with scheduled check-ins, allows us to stay on top of your business financial activity, ready and well prepared, help address any issues or opportunities that may arise. So we're going to provide proactive business advice, and we're going to do business review sessions, again, making all of this your own. So shift number one, making the firm the number one client. Shift number two, premium prices. Shift number three is leading with advisory. And again, you got to get stuck into that Pareto. So mindset and Pareto are so important. And then what we're going to do is we're going to move into a target client focus. I'm going to give you some how-tos on how to do that. To do that, we'll do another case study. So Carrie's got a firm up in Northern Michigan. 3 years ago, her client base was dominated by low-value clients. She had 417 clients in her firm. 263 of those paid less than $1,000 a year. So we actually met Carrie in a program like this. Tax season was insane. You know, it was insanity filled with too many hours, appointments, and staff turnover. And Carrie knew there had to be a better way. So let's talk about, and this is for you to think about what a target client definition and example is. So again, they're profitable. You can obtain leverage and you can get scale. Scale is you can get marketing scale, you can get operation scale, you can get pricing scale, meaning you have some expertise with them. An example could be closely held owner-operated businesses that do at least, you name it, $1 million in revenue and $150,000 in profit. That's obviously for you to fill in. Wants a full service year-round relationship, positive mindset and willing to listen, will work with our systems and processes, and recognizes and will pay for the value we create. So again, there's some definition and example on target client. And ultimately, once you hone in on that, you can see the trouble that you have with, you know, you can't be all things to all people, because that's a quick way to be busy and not profitable. And so let's think about some target client selection criteria. So we've got to have that target client. We've got to be thinking about our business model and what is some target selection criteria. So core values align with the firm's. The client values the service the firm provides, and the firm can dictate the terms of the client relationship. This is one of the biggest, and it's related to making the firm the number one client. So if you go to get your annual physical and you're going to go to your doctor to he or she You're not going to tell her how you're going to do your blood work and how to examine you. Far too many firms are service providers, not trusted advisors. We have to dictate the terms of the relationship to create the most value. So that's when we're going to serve you, how you're going to respond to us. It's how you're going to submit information to us, when you're going to pay for our service. So again, this is all about making the firm the number one client. Super important. And one of the things that we have you do is have you and your client salon sign a mutual commitment statement, meaning here's what we commit to do for you. This is what you commit to do for us. One of the commitments on the client side is respond to our communication in a timely manner. Some firms say 48 hours, some say a week, because I know a lot of firms chase information, whether it's to get financials done or tax returns done. So again, target client selection criteria, that shift to making the firm the number one client. And then of course the firm can scale this type of client, right? Because they don't create friction in your model. And that's where you suffer, is when there's friction. The client is willing to work with and respects your team. The client requires little partner time and input. Again, we need to be thinking about our model, where we're getting leverage. The firm achieves target profitability. So when you're pricing that job on the front end, we do still like timesheets and estimates for cost to think, are we achieving target profitability, which is a number of 75% gross profit. And then the firm, the client isn't going to create firm and partner stress. So what we do is we say, you have to go through these 4 business model questions always when you're going to take on a new client. Does this opportunity meet our business model? Of course, that assumes you have a business model. Where are we getting leverage? Price, technology, people, or a combination of the 3. People, of course, is if you have team members, they're doing the work for you and you're making money on them. Technology could be, workflows, portals, cloud-based accounting systems, outsourcing some work. And then price, of course, is pricing itself. So again, does this opportunity meet our model? Where are we getting leverage? Will my team be excited about bringing this prospect on? So that's a key one, right? Is will my team be excited? Assuming you have a team. If you don't, that's okay, because the next question is, am I excited about it? And then is, what does it require of me? Because we know so many firms that we've worked with over the years who they go out and they sell a piece of work, they visit a client, and then all of a sudden it's like, oh no, now I got to go back and do the work. So you need to be thinking about, what does it require of me? So what is some target client low-hanging fruit? Define your target client using the example provided. Share it with your team and key referral sources, because one of the things that we see as we start working with firms is that firms are very apprehensive about turning referrals away, particularly from a referral source. Some of that challenge is you just haven't communicated who you create the most value for. And then identify where you can find more of those target clients. It could be an ecosystem. So let's use a simple one, veterinarians. So get involved in their associations. Who are their bankers? Who are their software providers? And ultimately develop a plan of attack. So this go back to Carrie. Now Carrie's sitting with 57 clients. Profit has increased by 42% over that time. Her billable hours are way down. She doesn't do tax appointments. And similar to Perry, she's based on client acquisition, advisory, and leading the firm. And also, interestingly, on her partnership, she actually ended up buying out the senior partner. So as Perry brought someone new in, when Carrie got to the succession phase, she decided to buy the partner out, and she would have never done that previously. So giving you guys some real meat on the bones here, hopefully, that you can implement. So with that, let's go to our final polling question, then we'll talk about our 5th shift and answer any questions that you have. So polling question number 4, does your firm embed itself in its own numbers, manage by them, and make the firm the number one client? We need to give it a go. We don't have time to make the firm the number one client. Again, trying to have some fun there. Or we confuse busy with profitability at times. So give you a moment to answer these questions. We need to give it a go. All right, so we're going to get some folks out there digging into a Pareto analysis, either with our help or on your own. All good. So that's 40%. 20% were we don't have the time to make the firm the number one client. Again, you've got to make the firm the number one client. And then 40%, we will confuse profitability, busy with profitability. And that's really common in our industry, unfortunately. So thank you for that. That was the fourth and final polling question. I'll go through shift 5, which includes giving you an opportunity to talk to us if you'd like, and then answer any questions that you have. So we can just chat a little bit about Josh. He runs a firm now focused on target clients only. He joined a webinar like this. We had a conversation. He took action. He works with a select number of clients providing high value tax advice. He's a very technical tax person. He realized he was giving a ton of work away. He had some of those insanity zone clients. And so what he did is he just remodeled and repackaged what he was doing. He eliminated scope creep, again, a big issue, and increased his prices by 30%. So again, I want you to come back to this and think about, do you have multiple business models? Are we in this growth phase? Is capacity an issue? Are we in succession? Again, I think it's a good way, good discussions to have internally. And to know in those different phases, the skill set you needed from infancy to growth is different than growth to maturity and maturity to succession, right? What got you here won't get you there. And so what you need to win, we like to win here at Renew and want you all to win, is making the firm the number one client, commanding premium pricing, leading with advisory, focusing on target clients, and of course, acting now, because the only thing that happens if you wait is, you know, we all get a little bit older. That's just the way it works. And ultimately, the definition of insanity is doing the same things over and over and expecting a different result, right? So you probably joined today because you want to command better premium pricing, you want to get out of survival mode, you want to focus on target clients and dig in to your own numbers. James Clear, he wrote a great book, if you haven't read it, called Atomic Habits. His quote is, many people wish they had started sooner. Almost nobody wishes they had started later. And of course, I would say the two things that we hear when we work with firms is people say, oh, I wish I would have started sooner, and I wish I would have raised my prices more. So how we can help as part of joining this webinar by the Insightful Accountants, we're happy to schedule a call with you, just have a chat, maybe dig into some of these polling questions, how we potentially could start your firm. It's just a conversation. It's not a hardcore sales pitch. So if anyone is interested in that, I will go ahead. You can go to renewgroup.com, or you can just type this into your browser and apply, and we can have a conversation. So Gary, with that, I'm happy to answer any questions if we got some questions, or if anyone wants to post questions in the chat panel now, now's a good time to do it.
Yeah, there's a few in there. Jake says, I do a lot of tax planning type of advisory work, but that doesn't tend to be ongoing advisory. Most of the clients that come to me are not really good advisory type clients. How do we market more specifically to businesses that can really use advisory CFO type of work?
Good question, Jake. I would just say, are you trying to sell advisory? Go back to that slide around sea of sameness, target client selection criteria, target client definition, and then how do we market more specifically to businesses? I think I would say, you know, look inside of your own client base, and are there any of those folks in your client base when you do your Pareto that do want advisory, and what are some of the consistencies? I mean, We're definitely fans of developing niches, whether it's related to, owner operated businesses or local businesses in your area, or it could be, veterinarians or doctors or dentists or manufacturing or construction. So again, in summary, go back to defining what you provide, positioning yourself to do that, and hopefully finding some mixing and matching there. And Jake, if you want to schedule a call with me, I'm happy to dig into that some more. What were the 3 things we can do to get leverage? Pricing, technology, and people. So again, what's your commanding premium pricing? Technology could be things like Shirt Prep or Expatax. And then, of course, the people side is who's working for you. I couldn't click on the form. I don't know if that's to, that was at 11:26. So not sure, Gary, what that question is. I think you're going to provide handouts for everyone, and I'll let you answer on the recording.
Yeah, and on so there's a link in the chat for the 2-hour YouTube page, and the recording will be shared via YouTube. Typically within about 3 days is what it takes us to get it edited and posted. That link will also be sent to you in an email 24 hours or so after the close of this event. And the presentation deck is also in the chat as well. I will repost both of those right now as well.
Awesome. Well, thank you everyone for attending. Love the questions. That makes it really rewarding to be able to help you all with the things you're working on. Again, schedule a call if you'd like to have a chat. Gary, you and your team at The Insightful Accountant, thank you very much. Awesome, and appreciate it.
Sorry, I was posting those 2 things in the chat. So absolutely, I appreciate you taking some time to, whoops, I went off screen there. Sorry, appreciate you taking time to share your knowledge. And I know that you've been doing this a long time. I think it was what, 21 years, I think you said, or since
25
2000.
plus.
Yeah.
Yeah. So 2001 on my own. I did it for someone else for 5 years before that. So over 25 years. Yep.
Okay, fantastic. So and your information is on the screen. Is that what we're looking at there? Sorry, mine's all
That's
color.
right. If someone wants to schedule time, that's the way to do it. And they can also go to our website and they can schedule time, that way, or learn more about us just at renewgroup.com. So
then,
thank you.
Great. And then just a reminder, if you're looking for your CPE, you will receive an email likely tonight that will take you over to a survey, complete the survey. And again, it's just about this session that has like 4 really short questions and answers. And then after you complete that, you'll get that CPE certificate sent to you. So thank you all for joining us. Again, Shannon, thanks for taking some time out of your day, share your information and your knowledge, and we will see you all very soon. Thanks.
Thank you. Bye, everyone.